Hey, what's going on YouTube? Lance Away here. Hey, I wanted to go over what it costs for a 30-year mortgage versus a 15-year mortgage. So basically, I've seen the light. My first home I owned, I had a 30-year mortgage and actually sold it after 5 years and latched onto a 15-year mortgage, particularly because I want to retire within 20 years. So it'd be nice to get that thing done and over with and not have that payment in retirement. So my goal is to retire around 56, and we'll just see if it can happen. Let's go over the numbers. So home is approximately $360K, which some of you guys might think is super steep, but for the area of Northern California I live in, you know, it's actually quite a bargain. So 360K, say I put down around 80K to get my 20% and have no PMI, no mortgage insurance, private mortgage insurance. So I borrowed 280, a 30-year fixed at the time of when I acquired the mortgage. The rate was around 4 for a fixed, and that led to a payment of, with the principal and interest only, of $13.34 per month. With a 15-year, the rate is much less. It's 3.5, and then the principal and interest payments came out to about $2,002 per month. So $13.34 a month times 360 payments, which is 12 payments times 30 years, equates to $480,000. So almost $500,000, $500,000. Let's just put that down because that sounds a little bit more menacing. $500,000. Looks funky with a fat Sharpie. Conversely, at $2,002 a month times 180 payments, the total is only $360,000, which is pretty dang awesome. It's actually really close to what we purchased the house for, so that equates to about $80,000 in interest. But look at the savings here. 480 minus $360,000, you're saving $120,000 on mortgage. So on interest, you're not paying to the bank. So you know, we're trying not to make the bank rich, and you know, versus 15 years, I'm actually going to try to pay it down in about 10 years, and I've got a pretty good game plan for it. Basically, I get paid every 2 weeks. And if you do get paid every 2 weeks, this year, depending on how your 2 week cycle started, I'm actually going to get 3 additional paychecks this year versus 2 per month. There's a couple months where I get 3. So January I got 3. I believe like August might be 3, and as well as like October. So 3 additional paychecks, which I'm going to convert to, I might have to add on a little bit to make it, but I'm going to basically make 3 additional payments. Sorry, I can't squeeze it in. And I ran some numbers here, and basically 3 additional payments would get me down to 3 years and 8 months less. So I'd have it paid off in 11 years and 4 months, and the amount of savings would be $20,000 in interest. So instead of having $80,000 in interest paid, I'd have $60,000 in interest paid. So that sounds pretty cool to me. And if I made 2 extra payments a year, it would take 3 years off the mortgage. So instead of a 15-year, I'd have a 12-year mortgage, and I'd save about $17,000. So really what you want to do is, hopefully you've got a really nice calculator on your mortgage company. I was able to go on and kind of spread out the payments to modify an additional principal on my payment, and have it kick out what my new amortization schedule, I can't say that word, but and actually give me a new maturity date and final payment date. So I thought that was really cool, and basically we're going to aim for this. So hopefully YouTube is running strong, and hopefully I'm going to have this nicked before 11 years and 4 months. So if you guys stick with my channel, the proof's in the pudding. Stick with my channel and see if I can hit this mark here, or beat it is my goal. Okay guys, this is Lance Away. Just wanted to demonstrate a 30-year mortgage versus a 15-year mortgage, and how I would save $120,000, and this is in interest. And I know some of you guys, might say, why are you guys, assuming a $360,000 home? Well, we live in a pretty vicious state. I mean, California has one of the largest economies in the world, even more so than a lot of small countries. So $360 is a pretty sound price. It's going to be our nest egg for sure. Our last home was about $300,000. So we did step up, and we're going to pay for it, but we like our location a lot better. And as they say in real estate, location, location, location. At least we're not in the Bay Area. In the Bay Area, you can, the average 2,000 square foot home right now is going for $700K or even beyond. So I'm really glad I'm not in the Bay Area. And of course, there's a lot of podunk towns and, towns out in the sticks with a lot of country around where you could get a home for $200K or even less. So, you pick your poison and you deal with the cards you're dealt. I've been living in the same area for over 30 years, and I just love the area. I'm probably going to die in this area. So, you work with what you got, and if you're in the Bay Area, you work with a lot. And, okay guys, that's all I have for today. Thanks for watching. Subscribe, comment, and thumbs up if you will. Appreciate it.